Hello, good weekend to all. This is Adil bringing you your review of the European markets, specifically the FTSE, and also European markets, given the fact that it's a weekend, obviously, insights into the European and FTSE 100. Okay, please be sure to visit, obviously, my site. You can catch me on Twitter where I'm most active, and hopefully you continue to follow the videos here for an insight going into Monday's trading session, the 8th of February. Okay, so interesting week, to say the least. Obviously, GameStop, obviously uncertainty regarding Main Street versus Wall Street. That was the main concern, and then obviously that was negated by the the volatility and the concern regarding U.S. equities in terms of increased regulation, etc. That was all negated in the back of obviously vaccine positive news with regards to the vaccines being effective. The efficacy rates obviously stronger than expected. In terms of I think AstraZeneca, I think were one of the companies that stated that the mutations would be successful on those as well. I think Pfizer, also Moderna, and we also have the China vac as well, Sinovac. That's been approved potentially as well going forward, and they want to obviously donate to the World Health Organization in terms of obviously vaccinating the global population. So again, that certainly is positive. Also, the efficacy on the Russian version as well, the one from Russia certainly helped as well. I think the efficacy was quite high, sufficient enough obviously to neutralize, and again, it is quite effective in terms of its pricing as well. So everything bodes well in terms of the hopium trade, in terms of vaccinations. Okay. In terms of the UK, the main concern in terms of the FTSE 100, the focus has been on the BOE, okay, and that's what caused weakness there in terms of the sterling strength, given the hawkish nature of the BOE, talking down negative rates and obviously indicating potential quantitative tightening, which in and out obviously has, as you can see here, the spike in GBP has caused weakness on the FTSE 100, so bear that in mind. Looking at the daily chart, we could potentially see a breakout here, given the fact that the dollar has been exceptionally weak, although we have had a slight bounce recently. So looking on the weekly chart of GBP USD, as you can see here, quite an impressive break here higher, which again obviously doesn't bode well for the FTSE 100 on the back of the mutations, although obviously, like I stated, the vaccine news certainly has been supportive. We did get weak earnings from Shell as well. That certainly is a cause for concern, so take that into consideration too. Okay, so in terms of the main fundamental factors, like I said, on the one hand, oil price is doing really well, okay, on the back of obviously vaccination, hopium, okay. In terms of increased testing, over 75s, I think the report just over the weekend I'm reading as well with regards to adults being vaccinated by June, potential pubs opening by April, a further update on the February 22nd. So again, you've got the vaccine hopium, then obviously you've got BOE, obviously indicating hawkish tone in terms of FTSE. In terms of European markets, the real rally this week was on the back of Draghi, obviously potentially becoming the premier for Italy. So again, that certainly indicates an easy monetary policy potential stance and supportive of the QE mode in terms of the markets there. As you can see here, quite an impressive rally in the French CAC as well, even though they are indicating obviously the measures, lockdown measures remaining till potentially even June, July, etc. German DAX again very, very impressive to say the least, although the euro obviously, as you can see here, has moved lower, and that certainly has helped European equities as well to a large extent, especially with Mr. Draghi coming on board. Again, that's interpreted as the easy monetary policy, obviously deregulation and obviously easy monetary policy, which obviously is supportive of the market as well. Although having said that, GameStop obviously has caused some financial waves in the market, to say the least. Okay, so in terms of the technical picture then, let's quickly give you an insight, given the fact that we've covered the fundamentals now. Okay, so FTSE 100 holding the line here, holding the fort around the 6400 zone. Again, there is a cause for concern though, given the fact that we have a potential head and shoulder setup. Okay, so again, mark that on your maps or your technical maps there on the daily chart of the FTSE 100. Any potential short squeeze here is certainly very, very vulnerable. If we do see vulnerability, then one would argue that you are potentially seeing it around the 6650 zone, which obviously coincides at fib 50%, which again is previous resistance. So then obviously you got 61 and fib 75%, which is 6770, with the pivot high being 6903. Okay, in terms of the weekly chart of the FTSE, again, as you can see here, this bull flag certainly has been negated So the bears certainly did obviously gain control this week, and so the FIB 75% certainly has held, okay, on the weekly chart. So this bull flag certainly has been negated, therefore the bears are in full control. Very similar to what happened here, and as we obviously had a continuation pattern lower. So from my perspective, until we break out the key upper zone at around the 6,700 zone, obviously the bears certainly are in control in terms of the FTSE. Obviously if you continue higher, then you are looking at FIB 75% and potentially higher as well. So I think a lot of that will obviously depend on how the government, the UK government, certainly manages the actual mutations and whether they're successful in terms of the vaccination. So a lot of it does obviously depend on that. Given the fact that oil prices certainly have pushed higher quite considerably, as you can see here, I mean, it's been a very, very impressive rally in oil. We've taken out this key zone. You are now looking into this next key zone, which is around the $60 level for Brent. Okay, watch out there. So given the fact that obviously oil prices are severely extended on the back of obviously hopium, in terms of obviously the markets returning to normal in terms of passenger numbers, etc. A lot of bullish news certainly is baked in here, given the fact that obviously Chinese markets certainly have come back online. Obviously the stimulus certainly has been baked in as well with regards to US, which I haven't touched upon. Hopefully we'll do a separate video on US markets. But again, Biden's obviously $1.9 trillion stimulus certainly is being baked in here to a large extent as well. So bear that in mind. In terms of oil, I mean, it's been a phenomenal run from $35 up to $60, almost doubled in price. If we do continue, then you are looking at 66. But it's very hard to justify that, especially with the concern and the saga regarding GameStop, etc. as well. So, and given the fact that the dollar certainly is potentially latching on to support. So, again, keep that in mind in terms of oil. If we do see a reversal, which is highly likely, then the FTSE obviously will reverse as well. In terms of the FTSE going into the smaller time frame, 60 minute chart here, you do have an argument for an inverted head and shoulders pattern. So we have a HNS on the daily, but we have an inverted HNS on the 60-minute chart. So again, two time frames showing different stories. So again, if you do see a reversal, watch out for this key zone here. Okay, so your key line is 6550. If you break above that, then obviously the IHS formation certainly is in full steam ahead. Let's just quickly give you a figure here for the IHS formation, just so that you have that obviously labeled on your charts. So 6550 is your neckline minus your head, which let's just round this up to around the 6400 zone. So it's a 150 point move, which equals obviously 6700 on the upside. Okay, so interesting target, so keep an eye on that. Let me just clean this up for you 1 second. Oops, daisy, that wasn't very clever, right? Okay, let me just quickly and again, okay, so quickly do this for you. So IHS equals 6550 minus 6400, which equals 6700 target on the upside. Okay, so watch out for that. Okay, on the upside, 6700. 6700 coincides with this key resistance here, as we have already witnessed. A previous support equals resistance, and obviously 6700. Watch out for that potential level on the upside if we do reverse quite sharply. Given the fact that the BOE is certainly very hawkish, again, that can potentially will continue to drag on the FTSE. But having the news regarding obviously vaccine hopium, having news regarding US equities pushing to new highs, okay, on the back of stronger earnings, on the back of stimulus, etc., could potentially push the FTSE higher. So again, let's just watch the FTSE. On the counter argument for the FTSE is obviously the oil price is a big indicator for the FTSE, and given the fact that we are now approaching that $60 level on Brent, indicates potential risk-off scenario as well. So keep that in mind in terms of the FTSE 100. Moving on to the 10-minute chart, then giving you more of a deeper insight. Obviously, we've got this channel here, so watch out for this channel. In terms of the key support, obviously this has held quite importantly at 6460. Again, you are witnessing support around the 6440 zone, then obviously gap fill at 6410. A lot of support around the 6400 zone on the 10-minute chart. Resistance above is seen at 6520 zone, and then obviously you've got support resistance here around the 6510. Watch out here. We did get a dip late Friday going into the weekend. We have this bearish channel. Do we break out this bearish channel? Again, you've got a potential argument if we do see a bullish catalyst. Okay, so you are looking at inverted head and shoulders, right shoulder, and obviously potentially push higher up to 6,550, and then obviously resistance at 6,570. If you do break above this zone here, then obviously you are looking at the next resistance zone at 6,610, and then ultimately 6,700 with obviously gap fill resistance at 6,716 already closed as well. So interesting scenario. These are just potentially as a chess player. I mean, this is what we understand in terms of trading. It's really a game of chess. It's understanding all the levels on the upside and the downside. We don't obviously we don't marry one direction. We are open to both. So again, be open-minded, be nimble. Realize that buyers can change very quickly on the back of a fundamental catalyst. So again, very important to be flexible, be nimble, and be certainly open-minded as a trader. Certainly. You have to be willing to divorce your obviously inherent bias very, very quickly, and obviously marry another one. So again, just it's probably not the best analogy, but that's the best I can certainly conjure up at the moment. Okay, so in terms of the FTSE, we've given you an insight, and these are your key levels. Let's just cross-reference that with the FTSE 250. Again, immense support on the FTSE 250, given the fact that the markets were very weak on the FTSE 100. So FTSE 250 certainly is powering ahead. The weekly chart certainly very, very bullish. Again, we are looking to potentially test the all-time high in the FTSE. So FTSE 250, very, very impressive thrust higher on the back of this, given the fact that we did have a terrific sell-off. Now, what will be interesting going forward in terms of the FTSE 250 is the hawkish nature of the BOE. So that will be one of the biggest, obviously, impediments in terms of British exports, the currency. And obviously, if we start to get really hawkish in terms of the BOE and in terms of tightening, etc., then you are going to see a lot of pressure on the FTSE 250, which indicates a major sell-off on the FTSE 100 as well. So do we continue to obviously push higher on the back of the US markets leading us higher, or do we start to correct? So again, I'll try and answer that question on my US market analysis, so certainly tune in there. Let's cross-reference the FTSE now with the FTSE 350. Let's just see exactly where we are here. The FTSE 350 again remains weak, so it's interesting scenario here, giving you a larger picture in terms of the FTSE or UK stocks in general. So given the fact that we've got 350 stocks here, it certainly is showing you weakness, and you've got a bullish, well, not bullish, but a topping tail here on the monthly chart, so certainly indicating weakness. Weekly chart as well, as you can see here, we held at 200 MA. And that remains a key resistance zones for now. Previous support equal resistance, we've got a potential bounce, but certainly doesn't bode well given the fact that the FTSE 350 remains weak in my understanding. And again, the same pattern is playing out here as well, with your left shoulder here, obviously head, and then obviously looking to potentially put a right shoulder in and obviously start to flush lower. So watch out for that. Okay, so weakness in the FTSE 250 will really show the hand on the FTSE 100 as well. Weakness in oil will certainly show the hand there as well. Commodities obviously have rallied to a large extent on the back of obviously the rumour post GameStop that SLV or silver is the next potential commodity to get squeezed, and that helped commodities to a large extent before it obviously started to sell off quite rapidly. So again, be very careful. Be very, very careful. Okay, moving on to European indices. Again, double top on the German DAX, so watch out here. The Draghi euphoria and the vaccine euphoria. Well, I don't think there's much of a vaccine euphoria in terms of European equities, because they really have been accused of messing up the vaccine management, rollout there. So again, that certainly has been a negative factor in terms of European equities. Daily chart, obviously, German DAX double top. You are seeing double top resistance until we break through that. Obviously, one would argue to the bearish side. Again, you've got unfilled gaps below, so it certainly remains vulnerable. The only thing that's been helping the German DAX is obviously the weakness in the euro. Bring up the euro here, euro USD. As you can see here, we had a pivot high at 1.2350, and now we're touching 1.19 zone. If we continue to fall, obviously that will help the German DAX. If we start to thrust higher from here in terms of euro USD, then obviously that will hurt the German DAX and hurt your European equities. So keep that in mind. In terms of the French CAC, now again, this from my perspective is the weakest link, given the mismanagement and obviously the lack of control, really, or poor government from Mr. Macron. Really doesn't have a clue in terms of how he's managing the markets or managing the economy, and obviously the actual pandemic as well. So again, a weakness here, gap fill resistance is seen at 5680, and then obviously you've got multiple gaps below, so watch out below in terms of the French CAC. If anything, that's the weakest link at present. The Euro Stoxx certainly has baffled me. This is one that I have to expect. I got stopped out on this one, and I'm actually short again in terms of the Euro Stoxx. Very impressive strength. It negated the last week's bearish candle, which I was expecting to hold above the 3610, 3620. We just literally ripped through that, which again, very impressive. Hats off to the bulls for those that are pushing that on the back of Draghi. Although I think it certainly isn't justified to a large extent, but my opinions are irrelevant, as we all know in trading. Okay, so the market is correct. You are always incorrect, and you have to switch your bias and obviously adjust accordingly. The fundamentals, from my perspective, still remain bearish and looking for a potential thrust and move lower. Okay, in terms of the Euro Stoxx, but again, one has to respect the move. One has to understand the catalyst for the move. Again, if they are putting their faith in Draghi, then I fail to see the euphoria, but obviously other individuals are, and my stop loss is in if I'm wrong. Okay, so that's basically where we are in terms of European indices. If we do get a double top on the DAX and we get weakness in the French CAC, oil starts to reverse, FTSE 100 certainly will crash. Okay, and also that needs to be supported in terms of the US market selling off as well, because they obviously tend to dictate market direction. So I hope that's an insight or help in terms of your trading for next week, and we take each day as it comes. Goodbye now.